The planning conversation starts here on the Income Protection Podcast. Here's your host, Mike Cogdall and Grayson Owen.
All right, Mike, we're back for episode 4. How we doing?
What's happening, my friend?
So we have a special guest on the podcast for episode 4. What do you say?
I say that I'm honored to have this special guest today. And as we said, we're going to periodically do this. And today, our special guest is a very dear friend of mine. We met in Colorado. I think we just decided 1996. So it was a couple of years ago. And I met Jamie when she first started, not in the industry. I'll let her do her little bio herself and do an introduction. But we met in 96 and have pretty much been hanging out together ever since as dear friends, colleagues. She watches me move every 2 years, asks me when I'm moving again. It's kind of a running joke. There are people that have bets on how long I'll stay here. And I tell people take the over because there's a pretty good chance I'll move again somewhere as long as I stay healthy. So without further ado, I'd like to introduce my dear friend, Jamie Fleischner. She's been in the insurance industry, I think, since 93, and I'll let her just take it from there. I'll ask her a few questions, and away we'll go. So I'll start with the easiest question. First, Jamie, thanks for joining us. And first question is really easy. How and why did you start in this business of insurance?
So I actually grew up in the insurance industry. My dad is a broker, so I grew up going to his office, working in the summers. He'd bring home applications, and as all my friends were playing, teacher, I would play business person. So I knew I always wanted to be in the business world. In high school, we had DECA, which was, a class where we did competitions. And for the first time, they actually had a life insurance category. And so I competed in the life insurance category and made nationals, which was in Denver where I was. So that wasn't as exciting. But so I kind of had some exposure to the industry. Then I went off to college in St. Louis at WashU. I took a lot of classes, thought I wanted to be a psychologist, did a bunch of internships, and realized I didn't want to work with that population. And so I did an internship with Northwestern Mutual in college just to see what it was like for myself. Started that in 1993, and they had a phenomenal training program. So I started with the one-card system. I learned how to prospect. I actually would probably get about one client a week. I would just pound the pavement. I would cold call. I would literally go to office buildings and look at the marquee and see who the young associates were at Ernst & Young and all of those accounting firms. And I would cold call them. I would get one person, and then I would then call and say, hey, I've worked with one person and a bunch of other people in your office. I'd like to talk to you. So I just started just going after all these people. And while I was there, I would just find a lot of mentors, a lot of different people to get a lot of different perspectives and just bring them on jointly. So I had a phenomenal training there. That was in St. Louis. And then when I was getting close to graduation, I was deciding, okay, I knew this was going to be the industry for me. Do I want to go back to Denver, where I was from? Do I want to stay in St. Louis? Or do I want to move to Charlotte, North Carolina, where my parents had moved while I was in college? So I go out to Charlotte. I'm pretty sure that's where I want to be. It's a new city, new fresh start. I interview with them. And at the end of the interview, the guy says, we think you're really great. I'm looking for a new secretary. I think you ought to be my secretary for a few years, and then maybe you can work into being an agent. And I looked at him. I said, are you crazy? I'm already an agent. I'm getting a degree from a prestigious institution. I'm already selling. Goodbye. So meanwhile, I also interviewed in Denver. The Northwestern Mutual Agency actually wanted to give me my own agency. And I said, I'm 22. No one's going to listen to me. I interviewed at Principal and really connected with Dave Golden, who was the general agent at the time. So committed to working with Dave. After graduation, moved back and worked at Principal. And that's where I met Mike Cogdall. So early in the career at Principal, they were telling us, you need to be a financial planner. You need to get Series 6, 63 licensed, all of that. I got all of my CLU classes. I took LUTC classes. I had mentors. I was doing everything that I could. I would go to NAFA meetings. It was NALU at the time. I was on the board. I would just listen to as many people as possible just to get as much information to try to succeed in the business. Dave Golden was the president of the board at the time, so he put me on the board. And so I felt this extra pressure thinking, oh God, if I fail in this business, this is going to be so embarrassing because all these people on the board will know. My boss is the president of the board. My dad's in the business. So I just felt this extra pressure, like it's just going to be a matter of time. I just got to stick with it. And so I did everything that I could to try to succeed. Well, in May of 1996, my parents came out for my sister's wedding and my mom ended up really sick and was in the hospital for 6 weeks, needed a double lung transplant. And so there was no transplant center back in Charlotte. So she moved in with me and lived with me. And so I was 1 year into working with Principal and taking care of a gravely ill mother for full time. And I was dating my now husband for about 6 months. So I was under a tremendous amount of pressure. And so I would take my mom to all of these medical appointments at University of Colorado. And while I was there, there'd be all these young medical residents. And so I started talking to them about disability insurance. And so I started moving through the hospital and meeting a lot of people that way. And by taking care of somebody who was very, very sick, it really reinforced the importance of disability insurance for me. So for a lot of people that are going into the industry, there's a lot of hypotheticals and you think you're going to help somebody and you're trying to sell a product. But there comes a time in your industry where you know you're helping somebody, where it really hits you, where you're passionate about what you're doing and it's not hypothetical anymore. You know, this could be life altering if you ever need this. And so that's when I really started focusing on disability. Mike was very instrumental in helping me, making it, just simplifying the process for me and realizing, okay, this doesn't have to be complicated. You get the prospects, I'll help you through it. And so that once I decided, in a couple of years in, I decided I don't want to do all the financial planning. I don't want to do the Series 6, Series 60, all of that kind of stuff. I just felt really scattered. Once I realized if every single one of my appointments is just talking about disability insurance, it was so much more satisfying. I was so much happier and I started seeing more results. That was probably the turning point in my career when I said, this is what I want to do. So that's how I really kind of got more into disability insurance in the early stages of my career.
It was interesting back then, Grayson, and I'll just throw it in, is Jamie was in the agency and we had a little brokerage shop next door. And Jamie so didn't want to do all the financial planning and all the things that all the other agents, that's all they talked about, right? I mean, I was there too. I was the new principal guy for DI in the Western United States. And so I said, Jamie, you know what? I hate my office. They've given me an office, but I don't want it. I said, do you want it? She's like, what? I go, you can have my office, have your private time and do your thing because you don't like to be bothered and you're really focused. So I just moved out because I never really moved into the office, as we all know. And Jamie just took that office and just started focusing on disability insurance pretty much only because term insurance and life insurance came along with it anyway, correct? Yeah. I mean, because they asked the question when you're done, well, what else do you do? And then the other thing that I remember, well, actually, not remember, but I should say this, is Jamie just talked briefly, which I didn't know until now, that she thought about being a psychologist. Well, little did you know that in the insurance industry, you overcome insincere objections, manage expectations. So you really are kind of a shrink without training. Anybody in the insurance industry is, because you got to really get into somebody's head every now and then, correct, to get them to say yes. And with that being said, how do you talk to somebody real quickly from, like, what's your stump speech, your elevator speech? And I know it's not a speech, but what do you say to somebody that's brand new, you've never spoken to before, to help our listening audience crack the code or break the ice to talk about, because you're only focusing on disability insurance, which you and I agree, that needs to be a single topic. So what do you do to get this ball rolling?
Well, I also realized early in my career, I mean, I was 22 years old going out and selling. And so you don't have as much credibility when you're younger and you're going into it. And your prospect base is usually kind of more your peer group. And so something that I also realized early on is, personally, I think it's a lot easier to sell disability insurance than it is life insurance. So what I look at it from the perspective of, if somebody is reliant on their income, they're working because they have to, not just because they want to, it needs to be protected, period. End of story. If someone else is relying on your income, that's when life insurance becomes important. When you're married or you have children or you have a mortgage or a business, someone else will suffer if you die. But if you are relying on your income, it needs to be protected, and it needs to be properly protected. So it's that simple. So are you working because you need to? If something happened and you didn't have your income stopped, do you have enough assets? Are you financially independent? If the answer is no, then you need to properly protect it.
Is it fair to say that it's the conviction part, even with you, as you look somebody in the eyes, as you're looking at me, even on a Zoom call here, and go, you've got to do this. This is without choice. You know, as Grace and I laugh almost every episode, there's only two answers, yes or no. There shouldn't be a maybe.
I mean, I think it's so interesting because a lot of times I say people protect everything. You know, you go get a new Apple phone and you immediately get Apple Care because, yeah, of course. The reality is if I drop and break my Apple phone, I can absorb the cost. I get Apple Care because I get Apple Care, but it's really not necessary. For most people, if their income stopped, they'd be in a world of hurt. They can't self-absorb that. They don't have enough assets. They don't have an income stream elsewhere. They don't want to rely on somebody else for it. So if you are relying on your own income, it just needs to be protected. And you can't necessarily rely on the government or your employer only, or your spouse or your family or whatever. You need to look at all of the different things in the scenarios. If something happens, how is that income going to be replaced? Everything in your financial plan, everything in your world is relying on that income. And I also tell people, I mean, a lot of people in the industry talk about this, it's your largest asset. So everybody thinks, oh, it's my house, it's my car. Your largest asset is your potential income. So in your ability to produce that. So if you turn off the ability to produce that, you've got millions and millions of dollars unprotected that all of your life dreams are relying on. So that needs to be protected.
That being said, so I know it's first out the door for you every single time. And just to give, again, the listening audience some perspective, approximately selling only disability insurance, how many life insurance policies do you think you also sell in a year because you get asked?
I probably sell almost as many life insurance policies as I do disability. And some of that is because I sell a disability policy and a few years later, oh, I got married, I need a policy for me and my spouse and everything else. But I still sell hundreds of term life policies.
Every year.
Absolutely.
And now let's fast forward into the world that kind of left me behind, social media, technology, and those things, and how you began to build, because I remember when you started with Set for Life, and you can explain that in a second. So take a minute here and explain to the audience today, because it is 2025, not 1995, where we were flip phoning instead of what we have now. So just give the audience a little bit of an overview on how you kind of like morphed your business to actually where it is today in 2025. Because I think that the social media piece and the technology piece, you were one, I think, an early pioneer. I really would say that openly, that you are one of the first that I ever knew that started to use that to your advantage. I think you once told me that you're like, even your web page was your new calling card.
Yeah.
Or your new business card.
We started as KF Financial because when I started in the business, I was Jamie Cantor. And then I got married in 99 and became Jamie Fleischner. And so I was like, okay, I'll be Cantor Fleischner Financial because I was a financial planner. And then I realized I don't want to do that. And I noticed so many people in our industry, they call themselves financial planners, but really they're insurance salespeople. And I just said, you know what? I need to be forward with what I'm doing. I need to be proud of what I'm doing. So I rebranded myself, I want to say in 2000, as Set for Life Insurance. I got a website. Well, I did have kffinancial.com. Now it just points to Set for Life Insurance, but I completely rebranded to Set for Life Insurance. And so I think I started a website, I want to say back in 2000. I was one of the very first.
Well, you had to, for those that remember, you had to let Y2K pass. Yeah. Remember, the world was gonna shut down. For those of you that are old enough, if you're not old enough to know Y2K, look it up.
The other thing that I had to let pass, I'm pretty sure, was my securities license, because you couldn't have a website or say anything or do anything or blog or write it. Compliance. I didn't want to deal with that. I just wanted to do disability insurance. The other thing is back by 2000, I was licensed in all 50 states. My clients were all over the place. So I was already licensed everywhere. So I started a website and I just put it out there and I did a blog, and I think I was doing, Google pay per click. And I remember I met somebody that lived over in like Golden, Colorado, and it was so weird. I still was doing appointments in person. And I drove to Golden and I met somebody that I met online. I'm like, is this safe? This is so weird. And it's still a client of mine, and I was a business owner or something. But all of a sudden I was getting clients from all over the country. And it's evolved over time. Social media, I'm not doing enough like I should. I mean, I've got a Twitter, LinkedIn, and all of those. I'm not as active on it as I probably should be. I'm working on getting some, just in the last year, we just totally refreshed our website. I am getting YouTube videos up and running. I think that a lot of people search on YouTube just to kind of create a more dynamic type of calling card, if you will, to talk more in depth about things so people can kind of see who I am, to create that trust. But I'm at a point now where, people come to the website. I'd say at least half of them I never even talk to. It's just all email, text. It's just all done online.
And with that being said, let's talk about the importance, which I've already done with Grayson, one of the first 2 episodes, the importance of this little thing called future purchase options and what it means to you and what it means to your client. And you and I deal with this almost there on a daily basis. So you're wildly familiar with it. And your capture rate on future purchase options, I will openly say, is one of the best in the entire industry. And that's because you're phenomenal at staying in touch with your clients. But if you could touch on that too, and what you think and how important those are as your clients grow in their careers and their practice.
So the most important thing in the industry is just to get the clients in the first place. Get them when they're young, and then you grow with them over time. And so the most important thing is you get it while you're young and you get those future increase options. So that way they can keep up with their benefits over time. So most of my clients, it's not one and done, where I sell them a policy and I never talk to them again, never hear from them again. So I've always kept up with my clients. Back in the earlier days, I did actual physical quarterly newsletters where I would mail those to them. Then it became more of a newsletter, an email one. Now I've got more of a client management system where we have automated things that go out once a year. Has anything changed? We have client update forms. So I do a really good job of keeping up with my clients, because the worst thing is when you find out you've either lost a client or somebody, oh, I didn't know you did life insurance. I bought it from so-and-so, or I went online and bought, or you find out these different things. So it's really important to keep up with your clients, and also just to keep those relationships up. The majority of my clients now actually come from referrals, because I've built these relationships over time and people feel comfortable. Because even though I have a presence online, people might still say, can I trust them? I'm still going to ask my coworker, is this person worthy? Who do you go to? So there's still that trust element. And a lot of that comes from the client building. But to your question about the increase options, I would say probably 1/2 to 2/3 of my business now, of new business, are increase options. Because once you have a large client base, that's where a lot of the future business is. You plant the seeds by getting the new clients, but the real business are those increases. And so I've always been meticulous about keeping track when those come up, and I have automated systems to keep up with clients. So it's not just relying on the insurance companies to send them a notification and in the mail that people don't even open their mail, that it's time for them to increase their policies. So it's really important that they keep up with those. And I contact them on a regular basis. And a lot of the policies too, they need to submit those increase options, or the policy benefit falls off the policy. Then they're uninsurable. They have to go through the process again, and it's a real pain. So it's fun and it's great for the client where they contact me and they say, hey, my income has increased. What do I need to do? Fill out this form, send us your tax return, and it's all good to go. It's such an easy thing to do. And, while you're at it, has there been any life changes? Yeah, I just had another kid. Do we need some more life insurance? Yes. So it's just a way to, anytime you can connect with a client, whether it's for an increase option or anything else, it's an opportunity to build the relationship.
Well, I think for you, it's fair to say it's not an immediate gratification business, because you never had a problem shying away from a $600 premium. And other people go, why would I sell disability insurance? Even if I sell 20 disability insurance policies at $600, it's a whopping $12,000. Hey, go ahead and elaborate on that for a second, because we're going down that path on how these $600 premiums, $2,000 monthly benefits turn into much different numbers over the course of 15 or 20 years.
Yeah, I mean, there are several occurrences where I sell surgeon their first or second year in residency. They go on and do an 8-year residency. So, it's 8 or 10 years later, they contact me, and that $600 case now becomes a $6,000 or $8,000 case. And when you do the increase option and it's a $6,000 or $8,000 case, you're like, God, that was so easy. It wasn't easy. I kept up with them for all those years. And as they moved and they, all of these different things. So it is absolutely a delayed gratification type of industry. I was not an overnight success by any stretch. It took me at least 5 to 7 years to make it in the industry. And those early years were brutal. And again, I just felt like, okay, I just got to stick with this because it's going to be so embarrassing if I don't. All these people are, looking at me. And again, I was under so much pressure because I, had to sell and hit certain marks, yet I was still taking care of somebody full time. And I think those first 2 years, I don't even think I was hitting the marks to maintain my contract. And when Dave Golden passed away, he died a week after my mom died in 1997. I got notes that were in his file that he had sent to the company, to principal. I know she's not making her contract. She's a future star. She's taking care of her dying mom. Don't let her contract lapse. Like, he was going to bat for me behind the scenes. I didn't even know that. So had he not done that, they could have just kicked me out and I might have been doing something else.
We both know in this industry, and it's so phenomenal you say that, because I actually got to know David really well quickly before he passed away. And we talk about this every now and then, miss him to this day a little, somehow they enter your brain, right? People that you impacted your life enter your brain every now and then. And I think it's fair to say that having mentors of any type is just, it's imperative to have somebody help and support you along the way. It's really hard, as they taught me in Ranger School, not that we need to talk about that 100 years ago. You can't do it alone, and you don't need to do it alone. There are people that want you to be successful.
Yes. And, I was just having this conversation with my husband the other day about all of the different people along the way that helped me really early on in my career. Because I've got college age kids right now, and they're thinking about industries, and I'm thinking it's so important that they work in an environment where people genuinely want them to succeed. And one of the unique things about the insurance industry is, even though we're competing with each other, we're actually all in this together. I mean, I'm in study groups now with other people that are, very, very successful, and we're all just sharing ideas and really helping each other because we know, we all helped. It's just a different type of dynamic. But I had a lot of people very early on who believed in me and really, really helped me. But the other thing is I also was very proactive about asking for help. So even in my early days when I was at Northwestern, I would go into the office and I would walk around and just go and talk to people. Hey, will you do this joint case with me? Will you do this? I would proactively ask for help. I would buy all of the books back in the day. You'd go and hear speakers and they'd sell their books. And I had the cassette tapes and I would listen to those when I was in the car. Like, anything for inspiration was really, really helpful. And, I didn't ever copy what anybody did, but I would just take a piece. Okay, I like how that person's doing this. Oh, I can incorporate that, because you really need to do things that are your own style. You cannot copy someone because we're all different people, but you can take things away from the way other people are doing it. And that's been a huge contributor to my success. I did not get here alone by any stretch.
Well, that being said, is there anything that you would change in your practice from the beginning of time until now? And then part B to that is, what do you see the future of this particular industry that you've been so involved with so many years as, individual disability insurance, paycheck protection, as they say?
Was there anything that I would change? I don't know if there's anything that I would change, because I am where I am based on the decisions that I made. I think if I can go back and talk to my early self, I'd say it's going to be okay. You're going to make it. You're going to be okay. But I also think it's that anxiety that keeps me going. Still to this day, I'm like, oh my God, where's my next case coming from? What if I don't? I still have that, which I think is what keeps me going. I think you need to have that inner drive and grit. I've never had a salary. I've never had a paycheck ever. So I still kind of have that fire in me to keep going. So I don't think I would change anything. I think I had to make all of those early mistakes. I mean, I'm glad I did the internet early on. I think the only maybe mistake is I probably just would have never gone down the route of doing financial planning. I would have just early on just said, I'm going to just do the insurance. But maybe I had to go through all of that to make that decision.
But even then you figured out what, as we talk about your sons, and I've got daughters that are getting, getting close to that college age, but that allowed you to figure out what you didn't want to do. So it probably was important that you did that to go, this isn't me. I don't want to sit here and do a comprehensive 4-hour financial plan. Why someone's looking at, their phone because I've lost their attention because it takes forever to do a full financial plan.
So I think
there's nothing wrong with it.
Yes, but I do think like a big part of the reason that I'm successful is because I did niche what I was doing. I wasn't trying to be all things to all people. I wasn't trying to do financial planning and this and assets under management and all of these things. And I think that's one of the mistakes that a lot of people do in the industry is they try to be all things to all people and they don't do any one particular thing well, or they're so concerned about getting the assets under management and the other stuff that they don't do the disability. And we were sort of talking about that before we went on air is I think that one of the things that I think in the future, a lot of, the industry is going more towards assets under management and financial planning. But I think there's a huge opportunity for income protection that's being overlooked. And so if somebody is doing more of the assets under management or something, they need to partner with somebody who does specialize in income protection or other areas to make sure that their clients are being properly protected. So if there's an area that you're not as comfortable with, just, send it to somebody who is comfortable and partner. And again, people in our industry, they are good about partnering and working together.
2 last questions. One is, you don't mind, but, tell the audience your webpage and stuff, because people sometimes like to steal other people's ideas that are really good. And as we just said, we're okay with that. I mean, at least look at like how it's laid out and what you do, because it may help somebody down the road that's 22 years old in the future. And as you've always said, we'll pass it on as best we can, pay it forward. So if you don't mind.
Yeah. So my website is setforlifeinsurance.com. And we pride ourselves, we're independent brokers. So what that means is I don't work for any particular company. So when clients come to me, I shop it around. So what might be right for one client might be completely different for somebody else, just depending on where they are geographically or if they're male or female or whatever they're doing. So, and so we shop it around and we keep up with our clients over time. We still do a lot of life insurance too. So, and we're now starting to shift a little bit into the long-term care market as our clients are aging. So, I mean, if somebody wants to connect or has questions or wants a mentorship, I'm always happy to help.
And one last question, and this is industry-based, is if you could have a crystal ball right now and want something from a carrier perspective, and it's not a diss or anything, 2026 is right around the corner. Is there anything that you would like to see different from, because all the carriers are not so dissimilar, correct? I think that's a fair statement. Similar in product, similar in underwriting, similar in things. What would you like to see, even product-wise, admin-wise, anything? What would you like to see that's a little different now or could be different then than it is today?
Yeah, so I think more admin-wise, I think that the insurance industry is behind when it comes to technology. I think clients move around all of the time, and I've got thousands of clients to keep track of. And even just recently, just in the last few weeks, I've had a lot of clients where their policies lapsed. They never got the bill or whatever. And yes, they should be on an automatic draft, but some people pay annually and they didn't get the bill, the policy lapse. I never got the notification. Client never got the notification. And now they got to go through reinstatement. And it is such a pain. There's got to be a stopgap to that. I mean, there's got to be ways where everything can be automated and clients are emailed. Your policy is passed. The agent is emailed. These, some of my companies are really good. They email me, the following clients had past due premiums. That's great. But there's got to be a better way to automate a lot of this. And I think that the insurance industry is behind in that.
I agree. And I think because this nation moves around a lot, not as much as I do, but a lot of people do move around a lot. I don't see a reason you couldn't do 60 days instead of 30, just another month to help get that fixed. Because the last thing that I look at when I'm moving, and I've moved a lot, as you both know, is I'm not looking at my mail for some life insurance notice because I like to pay my premiums too. And I'm not looking at my mail saying, oh, this is due. You know, and I don't go to my computer once a month, neither do you, on your own premiums to say, oh, I forgot what month it's due, because we all pay this forum right here, the three of us, we pay an awful lot of premiums to a whole bunch of insurances. And you've got to try to pay attention, but it's not always easy.
Yeah, it's really frustrating. I've got two different clients right now. They've had their term life for over 20 years, and they both moved and they missed a payment, and they're 20 years older. Obviously, their health isn't as great as it was 20 years ago, and it's just so frustrating. And they miss one payment. It's like, come on. So that is something that really should be avoided.
Anything product-wise you would like to see different? As a person that's been producing lots of income protection and disability insurance for many, many years, anything out there that you would like to see that's different? If you had a wish list real quick, and it may be nothing.
I don't know. I mean, I think that the products, I don't think the products have really even changed in the last 30 plus years. I don't see any of that changing. I'm starting to see a lot of clients that are, getting into their 50s and 60s, and we're kind of, modifying their coverage now, saying maybe we only need a 5-year, maybe we need a 180-day. Maybe if there's a way to transition that, okay, after you're in your working years, now you're going into your retirement years. Now, how can we flip it into a long-term care policy?
They've looked and looked, and I couldn't agree more. And I think that's still on the table with some carriers. It's just trying to figure out how to do it.
You own one of those?
I do. Here's the catch with it, though. You don't know what the long-term care premium is until it's time to convert.
Yeah, I understand that. And then how do you underwrite it? Like, that's really tough. Yeah. The other thing is, I think we need to increase the limits. That, it's probably going to happen. It happens every couple of years. But I already have clients maxing out over $30,000 a month, as the incomes are going up.
Yeah, I think that's a huge one that the carriers really do need to take a look at, right? Because if compensation is going to continue to go up and to the right, as we say, then they do have to look at, raising those issue and participation limits.
But as everybody has said forever, they really, people spend to the level of their earnings, period. I mean, it doesn't matter what your profession. Many people spend to the level of their earnings. And it's not uncommon for somebody to make $100,000 a month. It's just not in today's world. Now, there's a lot of people that don't, most don't, but we have to remember who our buying audience is as well. That is our buying audience, is people that make their top 1%ers, their top 5%ers in the country of earnings. We probably don't write a lot of people, unfortunately, that only make, $5,000 a month. I wish we could, but we don't. So I agree. I think that should be looked at. Grayson, any questions for Jamie before we lock this thing up this morning?
Jamie, thanks so much for your insights. Really enjoyed hearing everything from you. One last question for you, since you clearly outlined your marketing strategy from the one card system all the way to today online and doing social media. For someone starting out today, a producer starting out today that wants to focus on DI, do you still think it's important for them to learn the basics of the one card system and incorporate that, even if they're going heavy into social media marketing?
100%. You need to have a method of keeping track. And so I think really what the one card system does is it holds you accountable, and then it allows you to track your activity, because that's the only thing that you can control. I mean, I still have all my numbers going back 30 years. I still keep track of my prospects and business going in, business going out, my closing ratio, all of that, because that's what motivates me and it's what keeps me accountable. And so just like any kind of goals, you have to have tangible numbers. Otherwise, it's just this ambiguous, I want to sell a lot of insurance. What does that mean? And so how do you know if you're doing well? How do you know if you're getting any better or any worse? Or how do you compare from previous years? So I think going back to the basics is really important. I don't know how they're training people at this point. I think that having some kind of system is really important.
And I totally agree, 100%. It's all about, having a process, and it sounds like you have that completely figured out. So for any producers listening to this, take notes. But with that being said, Jamie, thanks so much for your time today. And Mike, any final thoughts?
No, Jamie, enjoy the weather. I think you have some rough stuff out there in the Rocky Mountains today. And other than that, thank you. And look forward to seeing you soon. Appreciate you
for having me. I really enjoyed it. Thank you, guys.
Thank you, Jamie. See you on the show next time, Mike.
Got you, buddy. And remember, financial planning starts with a risk protection package first.
And your clients are counting on you. See you on the show next time.
All right, my friend. Be well.